Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, February 24th. Nothing really has changed technically in our charts, so I'm going to run right through a few things. But what I've been seeing the last couple of days of consolidation, actually the last few days and going on past a couple of weeks, a lot of the safe haven inflows are going into the consumer staples, utilities, the REITs, and even bonds and gold. Gold is surging right now, all right, and bonds are starting to tick up again. So protect yourself. That's all I could say for those of you who have wealth management accounts, long-term accounts. Protect yourself. Figure out a way. Talk to your managers and make sure you say to them, I want to either reduce my exposure or look to buy protection such as puts. Sometimes the wealth management side you can buy inverse, to get short the market. Just giving you guys a heads up. Cracks are starting to increase in the wall. We are hopefully looking for a pullback. I think it's healthy for the markets. If it doesn't happen and you get some sort of a catalyst, markets actually sell off rather quickly. Excuse me. So just keep that in mind. I'm going to run through a couple of things. Do I think the top is near? I do. I'm not calling a top right now. We talked about this many times. We need to wait and see how and when a pullback occurs. We need to gauge a few things, and we teach you guys that at TMT here in order for us to call a top. As of right now, we're into heavy consolidation. We've been in a consolidation mode for quite some time. Yes, we've been rallying for the last 8-9 days out of that intermediate consolidation, but if you looked at price action the last few days that we've been consolidating, there have been numerous occasions where the markets try to rally and cannot rally. I mean, it's very difficult to put on 2 or 3 positive points in the ES at the moment, okay? Yes, the market has rallied from the lows. Buyers of dips are in place, and they will be until they get burned. Remember that. That's the only reason what's holding this market up right now. There's a lot of retail coming into the market at these highs. When that happens, there is almost a certainty that there will be a market pullback, okay? So just keep abreast of what's going on around you. All right, XLP, here is the Consumer Staples ETF, surging all of February. Why is that happening? That is a safe haven inflow. Let's take a look at utilities, XLU, okay? Surging, okay? And this just started, all right? Look at the base that we've created. Now it's starting to break back out to the upside again, all right? We talked about, let me just see GLD. I didn't put it up today because I don't want to waste too much time on a short video. All right, there's that lower high from that previous low. All right, now we're starting to sidestep here. Look at it's breaking back above. This is this morning. All right, gold is surging today, which I would love to see this pull back before we start looking to buy it again. But case trying to make here, you have to be careful. The inflows are going, and if you looked at the VIX, the VIX, which is the VXX or the UVXY, off the lows about 4 points. All right, and still depressed levels, so this could explode at any given moment. All right, so just keep that in mind, guys. All right, I want to show you the chart from yesterday. You could see we had the low here. We had 3 days of inside days. We tried to break out, we tried to sell off, but we're still stuck in this range for 3 days. But again, 2.5% from the 21 EMA on a daily chart. Ridiculous. Would not be buying up here. Okay, you got to think like a professional and act like a professional. This buying up here is all retail. You do not want to do that. Here's our 60-minute. Okay, remember we said riding the wave, riding the rail. Excuse me. That's exactly what's happening. Look at this: 4 trading days riding the rail, like I mentioned down here. All right, now we're just going to see if we're going to get that pull. We're going to get that pull back to the low, like to say 230. All right, which would coincide nicely with that 21 on the daily chart, or do we just continue to ride the rail and then explode higher one more time? That's yet to be seen. All right, here is what I want to show you, and I showed this to you before. This is also not a good sign. We have the comparison chart of the Dow Jones Industrial Average, the DIA, and the IYT, which is the ETF for the transportation ETF. And look what's happening. We're diverging. Now, this is not confirming the Dow Jones move, hence the Dow theory. You can look at it yourself, research it. This is not a good sign. All right, so there's a lot of cracks brewing, guys, so be very careful. Here's the transports cannot break out. We broke down miserably yesterday. There was one if anything stood out on any of the indexes that we follow and we show you in the morning, is the IYT. Look at this, starting to break down again. Okay. Now, I want to tell you, I'm not saying that the market is going to crash. I never want you to get that information, and I always try to talk within reason of what I'm seeing. This is right now what I'm seeing. Things change, right? Fundamentals and technicals in the markets change rapidly. Right now, I'm seeing cracks in the markets where we could get a decent pullback going into the spring, summer, and then we could rally again. We could rally to 2,600 in the ES. Who knows? But I'm talking about right this second. For those of you who have the longer term accounts, and you've done very well, you don't want to give those gains back by a manager saying, "Oh, don't worry, ride it out, ride it out." Why? Why would you want to write something like that you've put risk on to make that money? Take that money either off the table or roll it into some utilities or some staples, or any, say, even gold for that matter would be fantastic. Something like that. All right, next is going to be a free level. These are the levels I'm giving you. These are free right now. This is on our Pro Trader Premier video, but these are free. I'm giving these to you guys. I've had a bunch of guys that seem to be short IWM. So I've basically told you this yesterday, but I wanted to show you what our subscribers already know. All right, these are the levels, guys. All right, and then here's the 50. 127. That's going to be the bigger downside target. It's the top of this candle here. Okay, so just keep that in mind. Write these down. If there's any change in the levels, of course, I'll let you guys know. And lastly is the Q. So just keep an eye on things. Today is Friday. Could get really hairy today. And if not, next week will be very, very interesting, to say the least. Yesterday, I just want to point out, I'm sure all of you know this already, but Donald Trump made a tweet stating that the infrastructure plan that he's proposing is now going to be delayed to late 2018. That's just one of many that the market has anticipated that is going to get done rather quickly. Nothing is going to get done quickly. So this whole rally that he's anticipating, tax cuts and everything else, what have you, remember, guys, the market already assumed it. Everything is priced for perfection. Just keep that in mind. Have a great weekend. We'll see you on Monday.